A very good afternoon to everyone, and a warm welcome to all of you joining us for this webinar today, the Regulatory Compliance Insights, a knowledge initiative designed to simplify, clarify, and guide financial institutions through evolving regulatory landscape. We'll explore the challenges, expectations, and structured approaches needed to strengthen compliance practices. Today, we are honored to have with us a distinguished industry expert, a professional whose decades of experience in the banking sector have helped numerous institutions streamline operations and strengthen compliance frameworks. Our guest speaker for the day is Mr. Durai Raj, fondly known as DR, advisor at Inspirisys Solutions Limited. His extensive background and deep understanding of regulatory systems make him the ideal guide for this episode. Welcome, DR sir.
Thank you, Yamini. It's a pleasure you being the moderator for something very important, the subject, which is compliance for the banking industry.
Thank you, sir. So you began your career at the head office of Canara Bank and working with the management information system, a role that you exposed at a very early stage, and you probably come across a lot of gaps and bottlenecks and operational constraints that often lead to regulatory non-compliance. We would like to hear from you how these challenges were observed then and how they continue today.
Okay.
What are your thoughts about it?
Yeah. It's again, thank you, because I'm able to recall and recollect at least 4 decades of my experience actually in the banking industry. See, if you look at the banking industry, you can segment it into 4 eras. For example, pre-nationalization, that is in 1973, then PM nationalized about 14 banks, and then another seven banks, early 21 banks. People like us with our graduation and post-graduation qualification, we were able to get into the banking industry because of that nationalization, because it opened a huge opportunity for young graduates to join the bank. And at that time, bank job is equivalent of a collector's job, even better than that. So that was the era. So pre-nationalization era, post-nationalization era. Then that continued for about 1.5 decades. Then came the post-automation era in the early 90s and late 90s. 90s experimentation started, and the early 20th century, things started moving very fast. So a lot of banks were moving from connecting the branches through central or core banking solution and bringing ATMs into the picture and things like that. Then, if you can look at the last 10 years, I will say, starting from 2005, actually, there was a rapid increase of digitalization. See, the transactions have started moving away from brick and mortar banking experience where the customer walks into the bank and doing a transaction, chit-chatting with the branch manager or even complaining to the branch manager, whatever it is. Now he is doing almost all the banking transaction at the comfort of his home and spending a few minutes before the computer. So even for our regulatory compliance related topic that you have opened up today, we will go through these 4 eras now. It is pre-nationalization, post-nationalization, post-automation, and digitalization. These are all the 4 areas. So it will be very interesting how the compliance itself has manifested in these eras and what were the difficulties faced at that time, challenges and difficulties that are being faced today, and things like that. Okay, if you look at the pre-nationalization, banks were predominantly held by private individuals. That ownership of the banks were with private individuals. Even the bank which I joined in 1973, it was held by Subba Rao family, which is basically a Canadian philanthropist, and who started the bank. The number of branches were small. The number of customers they were serving were small. So RBI was still very powerful even at that time because they were controlling. Issuing of branch licenses were given only by the Reserve Bank of India and depend upon various parameters of the bank. Then how RBI at that time ensured compliance? Now, because branches were there, branch managers were there, banking transactions also was there, deposit mobilization, loans, more or less all these things that are today, it was also there. But today, most of things happening in the digital world. So you do not know the scale and the speed with which that are being done today. But in sum and substance, these transactions were there, frauds were there, and people cheating the bank by taking loan, diverting the loan funds for different purposes. All these things were there even at that time. But these were checked or brought to notice mainly by banks' internal inspection team. So the inspection team, which are predominantly managed by chartered accountants, they were actually going to the branches, inspecting the branches, and giving their audit report, bringing out what are all the things that are not being followed or not being complied at the branch level. So the same thing controlled even at the bank level. RBI used to come. Remember, a very interesting thing I tell you. At the time, RBI used to inspect only the head office of the banks. They never went into branches at that time. Very few branches here and there they used to go for inspection. So predominantly pre-nationalization, the complaints were done by physical persons visiting the branches or head office and auditing the bank records and digging out non-compliance data. And based on that, they were used to submit the report. Penalties were not heard of. At worst, if the bank is too weak and they have diverted the money and then the capital adequacy is very poor, they were asked to stop the operations or stop granting loans, and moratorium we used to call. The banks were imposed moratorium, not a penalty or fine actually. This is very important thing. Now let us move forward now. So I now take you into the post-nationalization era. So once the nationalization started, what happened is that there was a big bank, that I used to call as big bang theory in the banking sector in India. So branches were opened nook and corner of the country because of the need to reach as many poor people as possible. So the goal is, so nationalism was linked to socialism, and the socialism was linked to granting loans to poor people. At the time we used to call, there is used to be called one loan type called the Pujari loan. So the Pujari was the finance minister at that time and the Minister of State for Finance. And Indira Gandhi forced him that every branch should give so many loans. So there used to be a loan mela. Whoever was going going to a village or say living in a village, he will be called and he will be given a loan for 1,000 rupees, 2,000 rupees to buy a cow or calf or whatever it may be. But what happened? The end use, the purpose was noble, the cause was noble, the end use was not noble. People who used to take loans at that time, they were either spending the money on drinking or unwanted purposes. But the purpose was to create an asset. The thing was that is spent on consumptions actually. So with the result, a lot of loans were become poor. Then then the pressure of writing of the loan, all those things, and MPs raising the question in the parliament. A lot of things were happening. But at that time, what happened? There was a dearth of inspecting staff to visit branches and finding out the complaints related issues, because branch explosion happened. But the staff, were not coping up with the inspecting staff, were not coping up with that kind of explosion. So the inspecting staff who used to take 21 days, sometimes even 1 month in a branch to do an audit, he was asked to do the audit in 7 days. So naturally, what happened? Remember, it's all manual audit. Okay, what happened is at that time the quality of the audit started suffering. Even though the audit by book it was there, the speed with which it was audited and the duration with which it was given suffered a casualty. So these are the two important points that you have to take note actually. So, but yet the RBI, slowly RBI started moving, putting tighter control on the banking system, because now banks were nationalized. The capital belonged to the government. Government expected the banks to pay dividends at the end of the year, so the losses will have to be reduced. So that means the recovery of the loans has to be better. So the deposits run should not be there, because it's a government bank. Most of the moment is a government bank, the run on the bank on deposit means a run on the government itself. There will be a big loss of reputation issue involved. They started putting we had stalwarts in RBI at that time, starting from Garage, and so many people were there. They were all really nationalist and then focused on their job. So they were putting tighter controls. But again, I tell you, predominantly post-nationalization era was also an era of compliance monitoring by personally personal inspecting staff and audit staff visiting the bank branches and giving a report, and the branch taking their own sweet time to reply to the report or taking corrective actions and things like that. Okay, this was the post nationalization era. Then next I will move forward. Now I'll take you to the post automation era. Started as a small ledger posting machine in the branches. So centralization started happening. Branches were connected through network. Branch records were all moved into the central server. Core banking solution had every information about customers, accounts, transactions, and balances, and everything. So what happened? This post-automation era, including the statutory auditors, predominantly confined their compliance auditor to the head office of the bank. Meaning what? They were confining their audit to data centers and the head office of the bank, asking them all the queries and data relating to the compliance. Whether KYC norms are compliant, give me the list of report. Whether any overdrawings are there in the accounts which are not regularized, give me a report. Like that, multiple regulatory related obligations which they have to check up at the bank level. It all done digitally by pulling out reports from the core banking, and sampling method used to visit some branches to see whether the physical records were confined to branches. See, digital records were in the core banking solution, but the physical records were still at the branches now. Okay, so for the verification of physical records, they were choosing some sampling and then going to the branches and checking and things like that. Then they used to finalize the report. Both the inspectors used to finalize the report, RBI used to finalize the report, and also the statutory auditors should finalize the report. But the statutory auditors now have a better control because the data is in the center. They were able to give their statutory audit certificate much more comfortable manner, I would say, than in the previous case where they have to still visit. Even at the time, the statutory auditors used to visit only sampling. No auditor can visit all the branches. So based on the branches we have visited, blah, blah, blah and all, they will give a report. And then based on the data given by the head office at the time of finalizing the accounts, they used to sign the balance sheet of the bank, any bank. Whatever I'm telling is any bank. Predominantly cooperative banks and regional rural banks were kept outside the purview, where RBI did not initially focus on it. A lot of non-compliance were actually it is who is the political power person behind those banks. Those people were actually running the banks as if it is their personal fear. Actually, this was the era. The era is automation era, centralized automation. Centralized audit by a team and sampling audit at the branch level for verification of physical records like account opening form, account closing form, and stock. There are a few things which they have to physically verify, and cash, whether the cash balance in the branch is correct. They cannot go to all branches and verify. They used to take the data from the data center, go to the branch and check whether on that day whether we used to have surprise visit. The cash balance is correct. You will be surprised, Yamini, if I tell you that many of these cash audit, surprise audit, which predominantly involved the cash audit, resulted in either an excess or shortfall in cash. So that was the case actually. Shortfall in cash means two key holder, still shortfall. So bank used to initiate disciplinary action and things like that. I know many cases where people are not able to answer the shortfall, and even if they come forward to say no, we'll bring back the money, bank never used to accept because the intention is in question now. The integrity is in question. So they used to never accept that kind of a thing. So this is that. Now move still forward. Let us come to the digitalization era, which is the era now we are. So everything is changed now. The total change you see from scenario I built pre-nationalization now. Now RBI is not even sending the circulars and guidelines. All the regulatory notifications are posted in their portal, and the banks are expected to pull out that regulations and internally process it. And when they process it, they should create the traceability for processing the regulation. For that, they need to have a framework, because unless you have a framework, you will not be able to process any regulation involving that. The framework is required for what are the reasons that you have received it in time, that you have processed it in time, that you have traceability, that you have accountability, that you have proof for complaints. There are multiple factors involving in processing a regulatory obligations or regulatory circular involving multiple obligations actually. So everything is digital now. But what happened is that even though the RBI was making more and more circulars digital and consolidating the circular into master directions and master circular and issuing this to the bank branches, sorry, banks head office, banks were operating in silos. Now, what happened if there is a communication or regulatory communication relating to, let us say, credit? It used to go to GM credit department or credit wing head. Different banks call it different. Some banks will call it as department, some as wing, and the way in which they call is different. That the head of credit. Now he will receive it, and he used to take minimum 10 days, 15 days to understand what RBI is selling. Then they will form their own circular based on that, and their circular will have to go through an approval process. The approval process is that, but it will put into GM's committee, and then GM's committee will approve the circular based on RBI circular. And then it will go to the board. Board will approve it if it is anything policy is involved, and then it will be issued to all the branches for reporting complaints. Now, anywhere between 15 days to 30 days used to take to transform a digitally made available communication from RBI to a physical circular and then issuing it to all the branches. Now, later the banks slowly started sending the communication to all branches by mail. All those things are all later improvement came, but predominantly the silos approach were there. Then RBI felt that when they went, this is a very important point which I am telling you. When RBI went for inspection and audit, they were not able to know or get proof of evidence for regulation. The bank says, I have complied with the, if they ask, many of the banks were not able to give proof of evidence. So what it means is that, as one of the senior official of RBI told us when we met him, that it is a GIGO basis they used to do the audit. GIGO means garbage in and garbage out. That used to be the basis now. But wherever possible, they used to take a report. They were not able to do online audit. They were able to take a report. Based on the report, they used to verify whether regulation is done, the compliance is done, and then they were used to send that. They used to call the people for a discussion. In fact, I have been a part of a team which was a statutory for one of the local banks in Chennai. And I know that how the RBI looks at various things like NPA classification and rules related violations and interest rate related violations and things like that. Okay. Now, so RBI thought in recently, as in January 2024, that no, this is enough. You have to bring all regulatory complaints in one single unified enterprise-wide platform. The platform should be digital. The platform should be most modern. It should be technology enabled. He always never mentioned AI. It should say it should be on the latest technology, and the traceability should be there. And it also said that there should be knowledge dissemination of what RBI is saying to every complying unit. You don't try to interpret what I am sending, what is knowledge dissemination, what RBI says should be disseminated down the line. Okay, now that means what? Either you have to share the RBI circular itself, or you have to interpret the circular and give in small chunks or snippets or statements, so that the complying unit easily understands what RBI is expecting in terms of any regulation, and then they try to give response. So this is what happened in 2024. So shift the scenario. There was hurry. Banks were not able to find any one single vendor in a vast country like India to give the solution which RBI asked. Now, how do I say that? Because RBI extended time from, let us say, June 1st, 24, then they extended it to October 24 or something like that. I don't remember exact month. Then the final date was March 2025. This was the time. By this time, banks were asked to install such a system, single enterprise-wide system, unified system for the regulatory compliance. And banks floated tender. I know one, Punjab National Bank floated a tender. inviting people to participate and develop such a system. So currently, the status is that banks must have, as per RBI directive, a single enterprise-wide, uniform, most technologically advanced compliance management system and monitoring system, which I will say it is called straight-through processing from the RBI's portal, which publishes the circulars to the branches and offices which are reporting compliances. The entire chain, supply chain is connected, or I will call it as a process chain is connected and automated actually. But remember, Yamini, anyone who designs a system should also take into account the previous, that it's a post-nationalization era where the subject matter experts are sitting in the department heads as department heads, and they know how to interpret the RBI circular and ask what kind of compliances that we need to get from branches and offices. So the system should be centrally controlled but distributed processing, or it should be distributedly controlled but centrally consolidated. So the system should support both the models, and that was the challenge actually. You can have one way. Now how can you define a system which can support either way? Actually, that was the challenge, and I will be glad to say, if I can add, that ISL has brought out its Comply 360 platform, which meets exactly like what RBI has asked the banks to build and use. So that is the story of how compliance transformed and traveled from pre-nationalization era to the present digital modern era.
So, since you mentioned about Comply 360, I'm sure even our attendees would like to know what exactly it does and how it, since you mentioned that it is one unified platform for our enterprise-wide, what you call compliance. So, can you tell us something more about it, and that will help us to understand the product better?
No, the best way to understand the product, which is, according to me, a high value product for the banking industry, which is a contribution from ISL. As like, or I would say, I like GBM or our government business suit. Many people would be surprised if I tell you that 30% of the tax collection in the country today comes from our GBM. It is collected through our GBM. GBM's total tax collection is 4 lakh crore, and country's tax collection is 12 crore. So 4 lakh crore on 12 crore constitutes 33%. ISL already contributes to the nation's growth. This nation's growth and tax growth, ISL enables tax growth because of our government business suite of products. Of course, we are still only 10% of the GST collection, but we can improve upon that. Okay. Now, in line with, or in maybe it is in our DNA that we have to contribute to the nation, and the Complex 360 is a product which is now going to help the bank to be always compliance ready and alert at any point in time. How I say that? Now I am sharing the screen now for you, and I'm going to see the entire screen. I am doing it. Also share the system audio is already done. Anyhow, I will do that and share. Are you able to see my screen now?
Yeah.
That this is no.
Yes, sir.
What I should do? Share. Now I will talk about only 5 key features and 5 key benefits which are due to Complex 360, which accrue to the bank actually. The first important key feature of Complex 360 is that we give a centralized repository of regulatory communications using Axi AI, an AI engineer, platform, or I would call as the AI agent, banking AI agent, which does pulling the regulatory compliance circulars from the Reserve Bank site or any other regulator site and bring it into Complex 360. This is of very high value. You know why? Remember, I told you that converting one RBI circular used to take up to even 1 month for the bank at the time to communicate to the branches. Now, every night our access running and bringing the circular and creating the repository From the repository, there is an automated process to convert it into communication to all the branches, and with getting their branches acknowledgement for having received and acknowledged it. All happening overnight. Thousands of branches will know what is RBI circular coming through the bank, and the bank can add its own gist within no time using the AI. AI will give a summary of the circular. The summary also goes with the RBI circular to all the branches and offices. So it was one of the very high value item which we have given. It saves huge time. I told you why, because previously it used to take 15-20 days time. Now it is no time. Still there is practically zero time. And the cost, of course, the cost is of manpower, review, proof, approval, all those things are all eliminated. Now, second key feature is centralized control with the distributed processing, and the distributed control with the centralized consolidation. What we do now, we can use the RC universe, that is regulatory communication universe, by giving the power to communicate from RC universe down the line to chief compliance officer. That becomes centralized control. Or we can give the access or menu access or the power to departmental heads, and the CCO monitoring whether they are doing it, and when they are doing it, what is the current status of all the communication that has been sent to the branches for the purpose of consolidation, which we give a centralized consolidation by means of a dashboard. So naturally, distributed control with the centralized consolidation through dashboard is enabled in our product. So this also I told it was a big problem. Any system they build, it should support this. Our system support this. What is the benefit? Transparent processing. Who does what? With the continuous executive oversight, because we give a mobile app also for the executive to see what is happening in terms of complaints across the enterprise to avoid fines and penalties, again saving in cost. Third, complaints reporting from downstream linked to validated proof of evidence. I told you this garbage in, garbage out. So we have incorporated a feature in the product which, when a unit, complying unit reports the complaints, they are forced to attach a document. And we are using an AI engine to validate whether the document that is attached as a proof sorry, is valid, and if it is valid, compliance will be allowed. Otherwise, it will be rejected. So, watertight process with no scope for GIGO, that is garbage in, garbage out, is completely eliminated in our system. Fourth, integrated user collaborative tools. What is this? RBI has mentioned this is required. So they say among the various users of the compliance universe, there has to be collaboration. That means each one has to talk to the other people, chat with the other. There should be facility to phone and ask support, and there should be. Now we have added much more than that. We have given a bot actually, and the bot will give query or answer any query on any regulatory communication which the user is asking. Then there is a rolling band, like a news channel. So it keeps on rolling what is the latest regarding the communication. So there are some 5-6 ways the knowledge is shared to every complying unit and the branches in the complying unit. So that's what we are doing. So all collaborative communication between users are logged for audit, including phone calls. Not only that, we allow them to freely communicate, we are also discreetly monitoring it by logging their communication to know that their communication on the topic of compliance and there is no gossip or no things out of what they should be talking. Next, fifth and the most important thing is hierarchy based, because any solution that you bring into the Indian market, it should fit into the hierarchy of the bank. So when you go into the higher ladder of the banking industry, where public sector banks, they are all highly bound by hierarchy. Of course, when you come to the lower level of small finance bank, there are only two levels: head office and branch. When you go into a very big branch or bank like State Bank of India, the hierarchy level is 5. So the product should support 5 levels of hierarchy. Why? N levels of hierarchy, and also only 2 levels of hierarchy. Sometimes it is not even 2 level. Some of the small finance banks which we have been showing the product, they say, no, we don't go to the branch. We do all the compliance monitoring within the various departments of the head office. So it is level 0, according to our level 1, I will say. Head office level itself. So look at the way in which our product is designed. You can move from level 1 related control and monitoring to even level 5 related control and monitoring. This such is a wide canvas with which the product is designed and developed and it's launched. Easy and transparent follow because everything is digital, everything within the system, even communication, mail, everything is within our system. It is all subject to easy auditability, audit, transparency, and visibility. Visibility means anytime view, anytime, anywhere, any device view of the dashboard. The visibility. All the three things are inbuilt into our product, Yamini. These five key features will talk about how the product has been done. Now I will try to show you a small screen, only one screen, which we can say that a home screen. So I will launch now the home screen. Are you able to see?
Yes, sir. Yes, we can see.
You are able to see I'm logging in now.
Yes, sir.
I'm logging in as administrator of the application. So basically now any user who logs in, he will see the home page. This is the home page for every user. In the home page, as I was telling you, there is a rolling band. Do you see something moving from right to left, red color? And there are
Yes.
text in that. Are you able to see that? We call it as the rolling band. Like
Yes.
a news channel, you will see at the bottom. That is the rolling band. That is one way of communicating our knowledge dissemination. Second is that you see that boxes. These are all called data boxes. How many complaints total that is being processed in our system is the first box. Second, of which how many are compliant, how many are in progress of compliance, how many are still pending, no action taken, and how many are not applicable. Then see, this comes out of my experience managing the a big statistical department in a big bank like Canara Bank. Okay. Now, at the time, we used to create a competition. Who is the first to submit a particular report which is critical for the bank to submit to RBI? So I used to create contest and I used to declare who is the top 10 or top 15 or top 20 branches who were always first to submit. The same concept I have introduced in the product itself. You will see here top 5 in compliance performance. That is, they are the people who consistently performing compliance in time, on time, every time. Then there is a quickest 5. Who is the
We
quickest?
introduced gamification also into this. You've introduced gamification also into this.
Yeah. So, yeah. Actually, this is for actually competition, ma. This will create competition among the branches. This will go into their performance measurement record at the time of appraisal. All those things will happen based on these three boxes: top 5, quickest 5, and the slowest 5 in compliance. These are all at the compliance unit level. Then you have a graph which shows the same data box is shown by means of a graph. You can change it from pie to bar chart and part to pie chart so that you can see that. And then these are all the compliances forms which are under processing in our system. And we also show last 3 circular which we have received from Reserve Bank of India. So what happens is that anybody, this particular branch, the screen is common to all. A user who wants to see what is the circular from RBI, he can click it. I can see it in the PDF form. He can read it, and he can close it. And so this is one knowledge dissemination. This is one knowledge dissemination. This band. Then this user chat is there, so user can chat with any user in the system about and ask any queries about a particular circular, what I should do or how the branch should comply with and what are all the control or checklists that we have to follow. That is also inbuilt as a chat form in this in the system. Then if you go to the home screen, we have the chatbot. So the user can select any circular. For example, I'm selecting this circular. I'm asking just you can see this summary and it will give summary of the circular. See, the summary is coming 49, 50 points, important points. Suppose he is wanting to know something about it. For example, let us say, what is PIP? Let us say. So it will show you the particular para relating to PIP. So the user can keep on querying the RC universe and the comply and talk about that. You see, there is a PIP here. So it will pull the thing relating to PIP and so vetting and approval, the list finalized after the PIP process, proposal invert process, something like that, and vetted by Gram Sabha and all those things are all there. Wherever there is a PIR, wherever the word participatory identification of poor. So this is what is that. Answering your question about PIP, participatory information of poor. Here is what you need to know. This is what, who is telling me? A is telling me. From where it is telling me? Based on the circular I have selected. So the user can go on asking questions, drill down until he gets the right answer, and which will help him to report the complaints or take action on the points that he has to do. So this, in a very, very brief, in one screen, I have brought how the complaints is processed and the data that is processed is being indicated or shown to the top people to the bottom people. So at the head office level, if somebody is logging in, they will see all information related to the bank as a whole here. At the regional office, somebody logs in, he will see all the data relating to his regional office in the same screen. So this is how the hierarchy is implemented in the product. So I will log out from the screen. So we will have the walkthrough of the product on maybe on another occasion. Can I stop and the screen share now?
Yes, sir, you may please.
Okay.
I think you've given quite an elaborative overview of what Comply 360 does, and I'm sure our attendees have gained valuable insights about it. So, thank you so much, sir, for being, taking this session for us and highlighting how important it is for us to increase our pace also in terms of adhering to regulatory compliance and making sure that we do not fall in any kind of a risk that causes a reputational damage. Thank you so much, sir. Thank you all the attendees for being in the session.